Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high-quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then I will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they are moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong historical structure level for this market. In fact, this zone was acting as previous monthly resistance here, still acting as resistance here, again resistance here, and now the market has broken above that zone. So all this previous resistance is now turned support at this level, and from here there is a possibility to see some bullish price action getting created away from this structured zone. We can also notice that from a pattern standpoint, we have a very clear impulse followed by this correction. And in general, after an impulse, if you want to measure the correction, you have to take a Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.32 and 50% retracements lining up exactly inside of this area, creating a confluence of support inside of this zone, which we could in fact expect this market to potentially reject to the upside, because inside of a confluence of support area, we have good probabilities of seeing more institutional longing. Dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, the first thing we have to identify is that from a pattern perspective, in creating this move to the downside, the market is currently starting to create a weekly bullish pattern. In fact, it is currently starting to create this M pattern here. And in general, after the creation of an M pattern, we could expect a potential move higher for the completion of the M pattern at the neckline. So the previous support turned resistance from a weekly standpoint. So essentially here, from a weekly perspective, what we could expect is a bit more short-term bearish price action and then more bullish continuation. Dropping down on the daily time frame, what do we see? Well, from a daily perspective, the situation is quite clear. We have a market which at the moment is, from a daily perspective, in a bearish trend and has bearish structure, with the previous high being exactly this zone that I have now identified here with this blue box. Now, the market is clearly creating lower lows and lower highs. Now, until that will be the case, this market can easily continue lower. So the only way in which this market can continue higher is if first it breaks this structure to the upside, and a break of structure in this case would mean a break above this blue box, because if the market breaks above the blue box on the retest of the previous resistance turn support, in my opinion, this is the area inside of which we have good probabilities of getting more institutional longing, which at that point would further increase the probabilities of a potential rejection to the upside away from this level. So until the market will remain below this zone, it can easily continue lower. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing, and we check the data precisely for gold, we can see that even though price has been trending lower, we have not seen any institutional shorting during this move to the downside. In fact, we can see how with the last reports, we actually have seen shorts getting closed from an institutional perspective. We're not seeing longs getting added yet as well, but shorts are not getting added during a move to the downside. Now, usually in a move to the downside, if the market is to continue lower, and if institutions expect the market to continue lower, they would be adding shorts. Now, if they are closing shorts, it means that they as well expect more potential bullish continuation in the long run. So to recap, until the market will remain in a bearish trend from a daily perspective, this market can easily continue lower. However, if we get a break above on the retest, This is the area inside of which we have good probabilities of getting more institutional longing, which at that point would further increase the probabilities of a potential rejection to the upside away from this level. So if we get this break on the retest, what I would expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to identifying early shifts in a trend of a market, the best timeframes for that are the intraday timeframes. So 4-hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish market to an intraday bullish market, at that point I would expect a potential move higher for the market to complete this daily impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which is linked both in description and in my bio. Here, you will have the possibility to gain access to the most complete, all-inclusive mentorship program. And in this program, you have the possibility to gain access to all my trading courses, the COT data software, the trading station software with the Telegram signals integration, one-on-one private mentoring directly with me. And if you continue to scroll down on the website past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the registration process. So I really suggest to go and check it out as soon as possible. The link is both in description and in my bio, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.